everybody, and welcome to the third of the Center for Real Estate at the Mirage School of Business's breakfast series for the 2021 academic year. My name is Ed Colson. I have the continued pleasure of being the director for the Center of Real Estate. We have a fabulous program for you today, all about hotels and their present and future. And I'm really looking forward to today's remarks by our very distinguished panel. The center continues to be very active. I'll take this opportunity to announce our next event, which will be on May 12th. I'm very excited about this. It will be the UCI Center for Real Estate Symposium on U.S. housing markets and policy. And we're going to have three very distinguished guests from the Mortgage Bankers Association, from the Federal Housing Finance Agency, and from the Brookings Institution, talking about current and future home prices, dynamics of urban and suburban markets, affordable housing, the future of housing regulation, the role of Fannie and Freddie and the Federal Housing Administration in future housing markets. It's going to be very exciting. These are nationally known experts, and we are going to have a great chat with them about housing markets in the U.S. and with a focus on Southern California and Orange County. So save that date. That's May the 12th at 10 a.m. We'll have more announcements about that forthcoming, including sponsorship opportunities. It is my pleasure to introduce today's event co-chair and Center Advisory Board member, Bruce Fisher. Bruce is the chair of the West Coast Real Estate Practice and the co-managing shareholder of Greenberg Trauig's Orange County office. Greenberg Trauig has 42 offices nationwide, including offices in Europe, Middle East, Asia, and Latin America. Bruce focuses his practice on working with real estate funds, real estate investment trusts, and institutional owners and their advisors in connection with the purchase and sale, ground-up development, and financing commercial properties, including multi-property and multi-state portfolio sales and acquisitions. So Bruce has been very active with the community and really helps us out here at the Center for Real Estate. And I'm so pleased to introduce him. Bruce, the floor is yours.
Thanks, Ed. Very much appreciate. So welcome, everyone. On behalf of my event co-chair, Joey Lopez, and our planning committee members, Jim Pugh, Tim Guyman, Ryan Kennedy, Sean Rawson, Stacy Stemmen, Sharon McNamara Brown, of course, and Tom O'Rourke, and myself. Again, thank you all for attending. Also, a very big thank you for our breakfast series sponsors. Couldn't be doing this without them, of course. Talinvest with Tom Sherlock, Haskell & Wright with Tom O'Rourke, KPMG with Selena Daka, Snyder Langston with John Rockford, and BDO with Kerry Shaggett, and then also Greenberg Trauig as well. As you know, our sponsors have made it possible for up to 30 of today's pre-registered guests to receive a virtual breakfast, and it's a virtual breakfast, but it's a real breakfast. There's a card, and you get to order food through Uber Eats. I think we're having some difficulties given everything that's going on in getting those cards out. So I think they may not have gotten out yet, but they will get out. And hopefully when they do get out, you'll actually be able to maybe not even have stuff delivered, maybe go someplace. So with everything that's going on. I also, of course, want to thank Ed and then also Sharon McNamara Brown for all the work that they do, of course, for the real estate program at UCI, as well as their support team, Eddie Carranza and then also Jeannie Peruz, for all their work in facilitating and supporting our Zoom breakfast webinar and the entire series, actually. So again, I want to thank all of you for all of your, being here today. I'm sure people are maybe getting a little bit zoomed out, maybe, but the good thing is I think we've got light at the end of the tunnel. And by the way, it's not a train coming at us. Instead, I think it's a lighted path to what's new to come, which I think will be great stuff, and you'll hear a lot. I think a lot of you will be surprised from what you hear today with our great panelists here in terms of what's going on in the hospitality market. And we've all heard all sorts of doom and gloom and other things about what's going on, but I think there's reason to be optimistic going forward, cautiously optimistic, and you'll get to hear that from all of our panelists. So we're going to start off real quick with a very, very quick introduction. I'll let each one of our panelists sort of tell a little bit about themselves and their company for just like a minute and a half, and right after that, we'll get going. So first off, Chris Markey, Executive Vice President for Pacifica Hotels. Chris, why don't you tell us a little about you and your company, and then we'll give the others a chance as well.
Sure thing. My dad co-founded this company about 1970. We actually celebrated our 50-year anniversary in 2020, which out of all years wasn't the best. But early on, we started on a variety of investments, all pretty much real estate product types. Actually, professional sports was some of our early investments. We were the first franchisee of the at the time New Orleans Jazz, now the Utah Jazz. Back then, you could buy an NBA team for about $20 million. So that was one of their first deals, as well as some teams in the World Football League, a couple teams there, and then kind of slowly merged into real estate, specifically into hospitality into the 90s, where they slowly started building assets. And pretty much from about 2000 and on, we've been exclusively really buying new hospitality. We built our portfolio to about 40 hotels now, close to $1 billion of real estate. And we're one of the largest owner operators of boutique properties here on the West Coast, and top 30 management company.
Thanks, Chris. Next up, Brian Baker, Senior VP at Bank of America Commercial Real Estate. Brian, I mean, we all know Bank of America, so they're a large institution out there, but what do you particularly do with the bank in terms of what you've been doing?
Yeah, thanks, Bruce. And also thanks, Ed and Sharon, for having me today. Looking forward to this conversation. So I'm a senior relationship manager at Bank of America. In Orange County, our office handles a portfolio of about $6 billion of assets, office, industrial, retail, all your favorite food groups. I'm originally from Chicago. I've been in Orange County for about 15 years. At the bank, I handle our clients, a portfolio of clients here in Orange County. And then additionally, I am a UCI Mirage alumni, graduated in 2013.
All right, Brian, thanks. Next, Bob Olson, President and CEO of RD Olson Development. I think a lot of people know Bob. He's been pretty active in Orange County, doing a lot of things. So Bob, why don't you tell a little about yourself, and you want to unmute yourself as well.
I just sent you a notification.
There we go. Sorry about that. Bruce, thank you for inviting me and for doing this panel. I think it's very timely. I'll tell you a little bit about our company, RD Olson Development. We have been developing hotels for some 20 years now. In Orange County, I think the number's 11 of new hotels that we've developed. The last 3 hotels that we developed in Orange County are Lido House in Newport Beach, Pasea in Huntington Beach, and the Irvine Spectrum Marriott. All 3, by the way, have rooftop bars. I think that's an important element going forward, but we're active. We own 11 hotels today. We are actively pursuing new hotels, and more to talk. Lots to share. Look forward to sharing with you all.
Thanks, Bob. And last, not least, of course, Michael Deprima, Executive Vice President at CBRE, Hotel Brokerage and Investment Properties. Michael, why don't you share a little bit with what you're doing?
Thanks, Bruce. Thanks for having me. Excited to be on this panel. So I'm with CBRE, specialize in selling and financing hotels, predominantly focused on institutional quality assets valued at 50 million plus. Over the last 5 years, myself and team have sold and financed more than $2 billion worth of hotels in the state of California. We sold and financed Bacara up in Santa Barbara. We sold the James in West Hollywood, which was the first new hotel built in West Hollywood in over 50 years. Sold that a handful of years ago. And then most recently, last year, we sold and financed the Marriott Newport Beach here in Fashion Island. That's a little bit about myself, and look forward to this panel.
Thanks, Michael. We'll hear a little bit more, I think, about the sale that you're involved in with Marriott as well a little bit later on. All right, so with those introductions, why don't we get the show on the road? Let's start with Chris. We'll start with you. Look, we've all seen what's been going on in the hospitality market. We've all read the papers, see all this stuff the last year or so. What have you seen in terms of your portfolio, and it may vary, between some portions of your portfolio in terms of what you've seen, and maybe geographics as well.
Yeah, thanks, Bruce. It's been a mixed bag. It's no doubt been a year to remember. I think for anyone in hospitality, it's been an unprecedented year, even when you go back to, prior cycles. I think, the late Arnie Sorensen said it best, that this is probably the worst of the recessions combined. And, starting off in March and April, we saw huge impacts, obviously single-digit occupancies through March and April. Just really no demand whatsoever is kind of the peak of the lockdowns. Coming into the summer months, we really did see a bifurcation in our portfolio. Our drive-to demand markets, which luckily is most of our portfolio, we saw a huge return of demand in these properties. The Central Coast, we have a large concentration of assets up there in Pismo Beach. We actually started seeing a record number of demand going into those markets. Just with the lack of travel opportunities, we did really see a lot of flight to the coastal markets. So it was great. It was really promising for us to see that surge in that part of our portfolio. We own a large concentration of assets in the Los Angeles market, which unfortunately did not see that type of return of demand. That market remains down for us currently anywhere from 30 to 40%. It's been close to in the 20 to 30% occupancy range. But as we're now getting into this spring and we're seeing, the vaccinations get down, we're seeing all these numbers get lifted in all of our markets. And for us, we're very encouraged about the drive-to demand markets, more of that V-shape return in demand versus, the Los Angeles corporate-driven markets will probably see more of a U-shape in our portfolio.
All right, thanks, Chris. And Brian assured me that whatever numbers you guys throw out here in terms of what's going on, he'll just forget that when it comes time. You guys are all looking for financing, so don't worry about it. Although I think we have some good news to tell in any event. Bob, like Chris, you've got some very unique hotels, and probably your experience in one hotel versus the other probably varies a lot. I know you've had some good successes as well. So what have you been seeing in terms of revenues?
So pretty much what we're hearing across the board that everyone's hearing is LA has really struggled. We have a hotel in Pasadena. We have one in recently opened one in Glendale, but LA County has suffered probably the worst. We have two up in Santa Barbara County. Our drive-to markets are doing fine. Lido House is definitely a drive-to hotel. Our weekends are literally selling out most weekends, but we need our business traveler back. And that's really our Monday through Thursday night travelers. They haven't come back. They're starting to come back. And I think we're seeing that across the board. Our extended stay hotels are really performing, I think, the best. We have 5 of those. We have one in Maui. We are about ready to open a hotel there, our second or third hotel in Maui. But when we look at the bigger box hotels, we have the Marriott at Spectrum, 270 rooms. That's more of a meetings hotel, dependent on the meeting business and the business traveler. People are people are not coming back to the office as quickly as we thought they would, but we are starting to see it, and we're starting to see events being booked for fall. And so we're optimistic for fall relative to the meeting side of what we depend on. But we're definitely seeing travelers come back. I don't know about you, but if you drove around Orange County over the weekend, there's traffic everywhere. People are out. They're tired of being cooped up. And we're seeing it across the board in all the hotels, frankly, in terms of reservations are up significantly. We sold out. Of course, it's spring break. Spring break will stretch over the next 3 weeks or so. But generally speaking, past that, I think it looks strong.
Well, Bob, just a real quick question. Your hotels in Hawaii, are those completely open in the sense when people are coming over, they don't have to quarantine, or is there still quarantine requirements over in Hawaii? I'm just curious for everyone.
So I'm headed there tomorrow. Very stressful. I have to travel over there, but you have to have a COVID test 72 hours before, and it can't be if you're 72 hours before you depart, and of course it has to be negative. So, but other than that, it's relatively easy. Some of the other outer islands were more restrictive. They're reopening that back up, but and the hotels are starting to reopen. We never closed. In fact, we never closed any of our hotels through the pandemic. And so, but we don't have a big box downtown location. Fortunately, we didn't. But those hotels we think will come back. We're probably 2 years away from that, but who knows?
Right.
But
Thanks, Bob.
yeah.
All right. Michael, in terms of, you see a lot of deals out there and properties going up for sale and representing sellers and buyers. So what have you seen over the last, during the pandemic? Last 10 months?
Hey Bruce, let me actually share a screen if I can, just talking
Sure.
about the decrease and RevPAR that we saw last year. Just to put it into perspective, the national RevPAR, and that's revenue per available room, was down 52%. To compare that to the GFC was down 17% in RevPAR. So going back to Chris's comment earlier, this has just been such an unprecedented shock to our industry. But good news is that, to Bob's point, we're starting to see activity, and definitely from the leisure transient side, we're starting to see business. I guess our forecast, we have two analysis here. One is a baseline, one is an upside. We're basically showing recovery back to 2019 levels nationally by 2023 in our upside, and 2024 in our baseline. To take it to more of a local perspective, looking at Anaheim, Orange County, these were clumped together. I think one thing that's interesting too is you think about 2018 to 19, we saw, very stagnant growth. Anaheim, Orange County grew at 2%, LA was flat, and San Diego was down -2%. Obviously, a lot of supply that hit San Diego over that time period. But as you see, Anaheim down 61% in RevPAR year over year from 2020 to 19. LA and San Diego both equal at 57%. Again, these big box hotels that are convention dependent, mostly being in Anaheim, LA downtown, and then obviously San Diego, it's definitely had a shock. Whereas, as both Chris and Bob mentioned, the leisure transient destinations are those that have, drive-to resort markets have been the ones that have performed best. So just wanted to give a little bit more context there. But in terms of sellers, it's interesting. We've seen there were approximately 20 trades that happened last year over 50 million, and 70% of the sellers last year were either public or private REITs. And the need for them to sell was what we call spot liquidity trades. So Host, who we represented in selling the Marriott Newport Beach Fashion Island, they were burning $100 million a month across their portfolio in May. So for them, and Xenia and others, they had needs to sell assets. So it's interesting as you think about sellers today, now that the REIT prices are at actually higher than where they were pre-pandemic levels, that's made the REITs on the most part net buyers as opposed to sellers that were last year. So it's going to be interesting to see who the sellers are this year. And again, I know we're going to talk about this later, but the distressed sellers we haven't seen yet.
All right. Thanks, Michael. So Brian, obviously you got a lot of loans out there, a lot of borrowers out there. You see a lot in terms of what's going on, what's happened the last 10 months. We'll get into the relief issues a little bit right after this, but just in terms of what you've been seeing in terms of the numbers, because you see it quite a bit, probably a broad spectrum of different type hotels, special hotels, the larger hotels, all over.
Yeah, I would tend to agree with what's been said already. Michael, the numbers really show, a lot of what we've seen this year. Those drive-to coastal hotels that, over the weekends, they seem to perform pretty well. The business travel, the Monday through Thursday, has been lacking. But our areas, whether it's Anaheim or at the beginning of the pandemic, or Orlando, some of those fly-to markets that relied on either business travel or folks coming in to visit the event centers that are there, have just been slow to recover. And so, we've started to see it a bit in Orlando as they've opened up in Florida. Disney World has opened up. You've seen people coming back. The rumors are they're pretty full capacity as to what they are allowed to have. Same with Universal Studios there. So as we look forward to Disney and other opportunities opening here, we're hopeful that we start to see occupancies and RevPARs creep back up over the summer.
All right, thanks, Brian. All right, so we sort of know what's been going on in terms of what the effect has been, but what about relief for all this? PPP loans, maybe lender relief. So maybe Michael, we'll start with you. What you've seen from your perspective in terms of how those items have impacted, the selling and buying of the hotels.
Sure. So I would say early on, going back to May, lenders were giving, 90, 120-day forbearance. Then we had that first initial PPP funding, the first stimulus. And literally, I mean, that was a Band-Aid that gave us, anywhere from 3 to 6 months of time. The industry savior here is going to be the second round of stimulus. This next PPP is massive. And had that not been passed and put into the system, I mean, they could have been totally catastrophic for hotel owners. I mean, there would be massive amounts of defaults and all the distress that many people that aren't in the hotel business. Everyone's like, man, there's got to be extreme distress right now. And the fact is, we haven't seen very little asset sales from special servicers or balance sheet lenders. I mean, there's been very little foreclosures. If anything, it's been assets that were troubled going into COVID are the ones that we might see, coming through the likes of special servicing. But again, the second round of stimulus is going to be great and timely too. So kudos to Chip Rogers at AHLA for really putting a ton of time in and lobbying for this for the industry.
Brian, of course, you've seen a lot, and I'm guessing we've talked about this a bit in terms of patience with your borrowers, and we'll get into a little more detail later, but just generally in terms of what you've been seeing with the PPP loans, and I suspect Bank of America has been providing those as well. I'm not sure if you've been involved in those, though. Why don't you share a little bit?
Yeah, so I guess if you rewind back to April, May, many of us became PPP loan officers, and that was, there were weekends, nights where we were working to set the program up. Remember, we're not lending, right? We're working with the SBA to get the loans out. So setting up our systems, working with our borrowers, getting the applications through the process, that April, May, June time period was very heavily focused on that first round of PPP. And we were very successful in it, and we were able to help out many of our clients. Yes, it was short term. We are currently working through, I believe it's PPP 4 at this point, where we've got more and more clients going back for second, third rounds of PPP. But it's, between the PPP loans, working with clients on helping them through covenant reliefs or modifications. Those were all things that we've worked on in the last 10, 12 months to help our clients get through this current time period.
All right, thanks. Chris, and we've talked about this a bit. I mean, I know the PPP loans really helped you guys out quite a bit and probably continuing to help you out. Why don't you share a little bit how important that was to you and everyone else in the industry, quite frankly?
Yeah, my usual job here is acquiring and disposing of our hotels, but like Brian, I soon became a SBA specialist over the past 8 months or so. Probably know too much about these PPP loans at this point, but they were a huge injection of lifeblood into our assets, and I know throughout the country. But yeah, we were great beneficiaries of the PPP loans. We did see relief on the bank front, mostly from our balance sheet lenders, like the B of A's and the regional banks. The CMBS lenders were not quite as gracious in their relief options. We really had to work through, and in order to, we saw a lot of looking the other way with the CMBS lenders, not necessarily as easily given forbearance as we were seeing with more of our balance sheet relationship lenders. So that was a challenge throughout that process, but no, we did benefit greatly from the SBA PPP loans. We did a first and second round. Again, these loans don't nearly replace any, the amount of displacement that's going on from the disruption, but they do allow you to stay open. They allow you to keep a staff at the property, keep people employed. We were able to bring people back off and furlough that, initially we probably furloughed close to 70% of our on-property workforce. So we were able to bring folks back with the PPP loans and keep people employed. Other relief measures didn't really work for us, like the EIDL loans or the Main Street lending program. There just were too many restrictions there to allow us to participate in those. But kudos, to AHLA and then making some modifications to the usual SBA platform to allow hospitality and restaurants of the sort to take advantage of these SBA loans, because in normal cases we would have been boxed out from a lot of these kind of SBA programs.
Right. But Bob, have your experience has been similar to Chris's? I mean, again, you've got interesting portfolios in terms of your hotels.
So yeah, we obviously benefited like everyone else from the PPP loans. I mean, if it were not for the PPP loans, we would have had problems on 3 or 4 of our hotels. I think we have 9 loans, and the first round have all been approved as forbearance, is forgiven. And I think are funded on all 9 this time around. So thank you for our federal government stepping up and helping out. But no doubt it's helped. We brought our salespeople back first, and I think the results really proved that was the right decision. So immediately get our salespeople were back out in the market. Not much in the way of reservations, certainly in the business front, but there is business. We've actually brought some of our hotels have a number of frontline workers. We have 2 or 3, maybe 4 of our hotels are running in the 90+% occupancy percent. Rate is down. We got to get rate back, but that'll be a climb that'll take a little while. But PPP has been good for our industry, frankly.
All right. And Bob, we're going to stick with you for going to our next topic. So look, we've seen what's been going on and what's happened in terms of the economics and the relief that was out there. But also hotels had to completely reinvent themselves in terms of how they operate because of COVID, in terms of, training for their staff, sanitation requirements, dealing with outbreaks if you had to deal with outbreaks, and many other things. So why don't you talk a little bit in terms of what you guys had to do and probably still are doing, and how probably challenging that was to do that, and whether when things get even better, whether you'll maintain some of those policies just because.
So coming into this, nobody really knew for sure what you were supposed to do. And really what it was focused on as much as anything is guest concern. How did the guests feel? Should you make the room up every day? What kind of protection do you have when your guest walks in the door? Everything from leave your front doors open, trying to keep fresh air blowing through the lobby, your hand cleaning stations, to wiping the guest room door down. I mean, nobody really knew how this worked. Close your restaurants. First, we slowed our restaurants down in our full service hotels. We didn't really know what to expect. And then California shut down restaurants, so we closed them. And it's been really reactive. I think it took probably 60 days to really get an understanding of what made sense, where the touch points were, how to make our guests feel more comfortable when they came in. And so I think we did a good job overall. We are still in COVID, obviously. Things are backing off a little bit. I will say that 3 months ago, every single one of our customers would walk in the front door with a mask on, looking around to see what precautions are being taken in the hotel. To today, I think probably a third of our guests are coming in to the front door, much more relaxed, less COVID concerned, and I expect that to continue. But really for us, it's about keeping our associates safe, number one, because they're exposed to everybody all day long. And so from day one, we did a good job of doing that. From the masks, I mean, there were some of our associates were reluctant to wear masks, but then if somebody had COVID, immediately they wear the mask, and it's mandated in all of our hotels that our associates wear masks, as well as our guests. That'll continue. We'll follow whatever the state guidelines are. I know that tomorrow we're supposed to, or by the end of today, in Orange County, slip to orange, which is going to be I think it will make our guests and our travelers feel more comfortable. But it's a moving target. We closed our beaches down. Orange County seems like eons ago when our beaches were closed down in Orange County, only Orange County. Now, right? How soon we forget. And I think our guests, by the summer, many will forget what's happened, and much easier to travel, feel more comfortable about traveling, and really a pent up demand to get out and go. If I can touch on, and I know you'll get to this, but there is a big pent up demand for travelers to get out. Europe is closing. They're going through another surge. Paris just closed earlier this week. So you can't really, where do we travel? And Americans, we love to travel. And so that's why we're seeing this drive to market. I think we're going to have an unbelievable summer. I have no doubt in my mind. I think we'll just ask yourself, where are you going? Where are you going to travel?
But we'll be talking about that more, but I do agree with you for sure. Chris, what have you been doing in terms of the same thing, in terms of all these operations, including, have your customers been following your requirements, or you have some pushback a little bit? Also, I suspect there's an economic effect to this as well. All this stuff you guys are doing, all the cleaning, the extra stuff, all this stuff has a cost as well. Time to get it going, cost to put it in, cost to maintain it, I suspect. I want you to share a little bit, Chris, as well.
Yeah, in the summer, it was a challenge, especially in our markets. I mean, our Pismo Beach market surged back to outperforming the prior year. So we went from literally being shut down to now scrambling to get people back and dealing with sold out, weeks and weekends going up to Pismo Beach in the midst of the pandemic. So, you have the mask wearers, the non-mask wearers. You can't win when you're staffed at a property. You have people coming in saying you're not taking enough protocols, and you have people coming in that are getting mad at you, telling them they have to put on their mask. So we're constantly dealing with on property issues there during that time. But we were able to kind of initiate our own Clean Pacifica, which because we have a largely independent hotel portfolio, we don't lean really on the brands to kind of dictate what our procedures are. So we have to initiate our own kind of protocols, but that was a whole retraining of on-staff property. We had to invest in new equipment that sanitize rooms and defog rooms. Our biggest concern as operators is what comes down the pipeline as far as, how California regulates this. We saw Airbnb demanding and telling their owners that they had to allow a 24-hour breathing room for every time they rent out their property. Now, if we did that at the hotel level, that would have a huge impact on our occupancy. So luckily, California has been flexible for the most part. There are some issues with how they've dealt with the COVID issues that are challenging for operators. But we just continue, like Bob said, the sentiment from the consumer has gotten significantly better. And so we're trying to balance that with what the kind of CDC guidelines are, and how the protocols we're supposed to maintain at these properties versus what the demand is at the consumer. And that's kind of the remaining challenge here.
All right, thanks, Chris. All right, let's keep moving, pivot a little bit. Let's look at the specific demand forecast going forward. Michael, what do you see for 2021, you know, in the next couple of months towards the end of the year?
Yeah, look, I think it's, we've hit on it early on. Bob said we need the corporate group business back. We need the business travelers getting back at it. We need conventions opening. San Diego is really, I think, one of the first that has, they have Comic-Con on the calendar, although it's at reduced capacity. Although you could say that's probably one convention that's, sort of COVID proof because everyone's wearing masks anyways. But, it's that's a good first step, right? I mean, we need the corporate, need the convention back. And, I think we're going to start seeing that later this year, third and fourth quarter, with leisure transient driving the demand here early on.
All right. Brian, are you seeing the same thing that Michael's explaining? And also, what about, drive to versus fly to markets? I'm sure there's a difference, and you're probably seeing differences there as well.
Yeah, again, I would tend to agree. I think this summer we will tend to see a lot of those drive to the leisure markets continue to do well. Bob made a good point. It's tough to go outside of the United States. So, and we're forced to, and which is a good thing. We're being able to experience some of these opportunities locally that, maybe we wouldn't have done in the past. I know my family is planning on doing a trip out to Utah this summer where we're going to get to see some of the national parks that maybe we never thought about doing in the past. So, that leisure drive to market, I think, will continue to stay strong through the summer. We've been hearing that there are more conferences coming out this fall, but I think what will be important is, once we see corporations with employees back in the workplace, when we see large corporations and it feels safe to send their employees back to the workplace, they will feel that it's safe to send them to conferences and start putting them back on planes. And there's going to be some time before that happens. We have to have shots in arms, right? We've got to continue to get the vaccine out. And when kids are back in school, those are all going to be good signs. Once the theme parks are open, we start seeing ballparks and the ability to go to sporting events. Those will all be the drivers that kind of show us, okay, now things are going to start backing up, start opening up for those kind of fly to business core markets, downtown areas opening back up.
All right. Thanks, Brian. Chris, what are you seeing? And when you answer that question, maybe talk a little about, leisure demand versus corporate demand. And then also maybe about, what's going to happen with, look, there were a lot of weddings that were canceled, or at least the parties were canceled, right? Bar mitzvahs, bat mitzvahs, anniversaries, special birthdays, all that stuff was canceled. And then you have the normal things every year, and then you have all the stuff from last year. So I see this thing just going crazy, because it's all going to be happening at one time once it opens up. I mean, so what do you, and especially with your specialty hotels that you have throughout in different areas, what are you seeing?
Yeah, well, one thing we've definitely learned is that a budget's only about as good for about 3 weeks in the midst of COVID. We're revising our budgets frequently coming out of this thing. Fortunately, usually for the better at this point. But, again, we benefit from having a largely drive-to demand portfolio and at a relative size that we're very comfortable in this type of environment. Our largest hotel is a 450-room Marriott that's in Hawaii. So luckily, our biggest hotel is in a largely leisure demand market. Now, our LA Central properties, those are going to be a challenge. Those strongly benefit from compressed LA markets driven by corporate travel, convention business, sporting events, all that stuff. Luckily, most of our LA product is on the water in Marina del Rey and Venice Beach at a manageable key count, where we're getting lots of still drive-to demand business there. We're getting lots of recreational business as all the sporting events are reopening up. So we think that that rebound will be a little bit slower in that LA market. Now, I talk about Central Coast. We're year to date in 2021, we're about 30% above 2019's RevPAR, not last year, but 2019, which was a normal year. We're doing about 30% over those numbers. So, I think we're seeing a lot of artificial demand coming into these really coastal leisure markets where, like Bob said, you don't have the option to go overseas. Still people are reluctant to jump on an airplane. So they're just going to get in their car, drive to a drivable market. We're seeing 3 to 4 hour drive is really where our demand generators are coming from at our properties. And so we see a lot of a positive upside. I mean, really aggressive growth rates in those markets. Even in the LA markets, we see a lot of forthcoming demand generators. I mean, our wedding inquiries have been record at all of our kind of wedding properties. Again, nobody wants to get married over a Zoom. So they've all been kind of kicking the date so where they can have a normal feeling wedding, family reunions, all of these are only going to drive demand once we get the clear. And unfortunately, we're still having to turn away some of these weddings just because of the CDC guidelines. But as soon as we get those things lifted from a regulatory standpoint, we think there's going to be a huge inflow of this demand, both on the corporate side and, the businesses need to feel comfortable in sending their workforce out again for liability purposes. But they're all ready to have in-person meetings and kind of kick the Zoom to the curb at this point.
All right. Well, let's pivot. We'll stick with you again, Chris. We're going to pivot again a little bit more. I mean, hotel business, you've got obviously income being generated from the rooms, of course, but then you got the food and beverage. And I think that's been a big piece of all of this the last, 3, 4, 5, 6 months, Chris. So what have you seen there in terms of food and beverage compared to just the income being generated by the rooms?
Well, we joke that, 20 years ago, you were happy if you were just breaking even at your food and beverage outlet at your hotel, because it was really just a service center to provide food options for your guests. But that has radically changed in today's environment, especially coming out of COVID. It's gotten to the point now where food and beverage is becoming a demand generator. And especially coming out of COVID, we opened, and I'll talk further about it, but we have a downtown LA, really lifestyle hotel that has a large rooftop food and beverage offering. And really, if you're looking to get out, have a drink, have some food in downtown LA, you're limited to options. So we're actually seeing our weekends, especially the demand shoot up, because they want somewhere where they can go, they can have a nice dinner, they can enjoy some drinks, and then they might as well just stay the night there and not have to worry about Ubering back or whatever. And so, we're seeing huge growth. Outdoor dining is huge, obviously. Luckily for us, many of our outlets had outdoor dining built in already. So that just played better for us as we went into COVID, and that really was the darling of the COVID dining options if you had a good outdoor dining experience. So, coming out of COVID, obviously the outdoor won't be as much of a component, but we've kind of rebuilt our outdoor dining experience, just in case that sticks. And, we are seeing that people are enjoying and rather kind of dine outside, even though they have the option at this point to dine inside. So, food and beverage is becoming an even more crucial component here in the hospitality world.
Bob, you had mentioned, I know that a lot of your hotels have the rooftop bars and dining, which I think has probably been very successful and very helpful to you during this time. Why don't you share a little bit about that as well? Bob, you're muted. You have to unmute yourself. That's right.
Sure. Okay. So, we'll start with Lido House. You would never dream that you can't bring customers inside the restaurant, but we actually have the rooftop there. That has been a godsend for us. And we have outside dining downstairs at our Mayor's Table restaurant. But I can tell you that, we had to close. There are times you just had to close in the state of California. So we did. We would provide room service, which is a money loser. I mean, you're just providing a service for your guests. So they'll come and stay because there's no other restaurants really that are open. Although there are a few renegades that stayed open, which actually we benefited from because travelers love to come to enjoy food and beverage in Newport Beach. But we've been fortunate to that end. But I will tell you, when it's cold outside, it is not a great experience. But what we've seen is our customers come bundled up, hats and scarves and coming up to the rooftop at Lido House and at the Irvine Spectrum. We're not in the ownership of Pasea, but we're good friends with our owners there, and they've benefited from it as well. I mean, but you go to Pasea or Lido House or to the rooftop at Irvine Spectrum, and people are ready for it. Now it's easing up. The weather's getting better, starting to see things open up. But food and beverage also includes banquets, and that's really a profit driver for hotels. And that's really what we need to have come back. I mean, food and beverage in full service hotels are important to our travelers, to our guests, for a good culinary experience. But where you make your money is in the banquets. So as of right now, it's very, very light business there.
All right, Bob, thanks. All right, let's pivot one more time. Let's go to, everyone take your crystal ball out a little bit in terms of future projections for hospitality 2022, 23, 24. Are we going to have a sort of V-shaped recovery? And then what you think the impact is going to be based on a lot of things going on, Super Bowl, World Cup, Olympics, NCAA championships again. And so why don't we start, Brian, with you on that?
Yeah, thanks, Bruce.
Oh, okay. I didn't hear. Who's the question to?
Oh, to Brian, sorry, to Brian.
Sorry.
Yeah, so look, I understand the question is to break out the crystal ball, but it's a difficult question in the sense that, it seems like the last couple of weeks, each week's gotten better and better, right? More and more vaccinations have gone out. We're moving from the red to the orange in Orange County. We have dates that our theme parks are opening up. We have the ability, to have a limited capacity at Angels opening game. All of those signs are positive. So, as we, we did have some positive signs at the end of last year, and obviously we took a step back between Thanksgiving and Christmas. So, now that we have the vaccines and we're starting to edge forward, I mean, my view would be that, we're starting to see a slower recovery over the next 3 months. By the end of the year and into 2022, we're going to start to see more travel. Again, we're going to start to see more people back in the office. And that's when things will really start to level out. For us, we are a large regulated bank, and we need to see some of the statistics. We need to see it more than just a couple quarters. So we continue to track, to work with our clients. But I think, as you kicked off, that light is at the end of the tunnel, and it's not a train coming for us. So, I think we're still, 6 to 9 months away from feeling much better. But talk to me in a month, and I might say it's coming sooner. So,
Michael, you have a clearer crystal ball? I mean, Brian's is pretty clear, but a little fuzzy there. What can you tell us?
I'll stick with our CBRE research, and especially on the upside scenario where we're showing a 23 recovery getting back to 19 levels. And again, it's market dependent, right? I mean, I think, obviously Orange County is different than New York City, right? So, and then also as you go up the Western coast, go up to San Francisco and Seattle. I mean, Seattle's convention center stopped construction during the pandemic. That was supposed to be open earlier this year. San Francisco had its own challenges going into COVID with missing out on some large corporate convention business. So I think as I look at the crystal ball here in Southern California, very bullish on Anaheim, Orange County, very bullish on San Diego, especially with life sciences coming into San Diego. That's going to be a huge untapped demand that's there presently, but only growing quicker. So again, I'm very bullish on where we are here in SoCal.
Chris? Give us a clear picture.
Yeah, we've seen huge jumps in our pacing as we're heading into the summer. We think we're going to have a very, very strong summer at our properties. Again, most of our properties are an arm's throw away from the water, which benefits us greatly. Our ones that are a little bit more corporate driven, we think, I agree with Michael's CBRE's assessment. We probably don't see those pre-COVID, especially in the shoulder seasons. Summer in California is always going to be nice right now, But as we head to those shoulder seasons, I think unless we can get corporate to pick up, that may take, going deep into next year till we see kind of those pre-COVID numbers. But, we're pivoting. We saw this as a great opportunity to shift a large chunk. We did a 5-pack of hotels that we shifted to Hilton. Usually we kind of had avoided, transitioning some of our properties just because of the costs that they require on their property improvement plans, along with the additional, royalties you pay. Sometimes we didn't see the cost benefit for our properties, but with the impact of COVID, the brands have been very, very user friendly, and providing us with these one-page property improvement plans to kind of transition to a brand, as well as really, really generous expense ramp. So we took that as an opportunity to partner with Hilton and align some of our more corporate driven hotels to take advantage, because there will be a surge in that corporate travel business as soon as that kind of unlocks on the business level. So with all the demand generators coming into that Los Angeles market, with the Olympics, the Super Bowl, the college football championship, I mean, there's a lot of good news coming into the Los Angeles and Southern California market as a whole. So we love kind of the growth projections as we really get out of COVID and then beyond.
All right. So Bob, hopefully your crystal ball has a happy face in there. Can you tell us a little about I know you've had some pretty good successes. So.
Yeah, so I think it's mixed. I mean, we're as they say, we're a street corner business. In every market, in every hotel product type is different. So the demand is different. We have a extended stay hotel up in Silicon Valley, very close to Facebook headquarters. They've been closed, and most of the tech companies have not been going to the office. But earlier this week, or was it late last week, Facebook announced that they're going to bring 10% of their staff team back on site. So that's good for us, and I think that we're going to see more and more of that as this pandemic sort of wears off. And I think not just travelers, leisure travelers, but I think business leaders are going to realize, you know what, this is done. We need to get back to work and back to the office and focus back into our meetings and do what we do. I think who was it said we were over Zoomed, and even this conference right here, right? I mean, how much better is it when we are at UCI in the meeting room with the panelists on stage talking? I mean, it's so, and everyone's connecting with their friends. See your friends there. That's really what the meeting business is about. And I think everyone's, I mean, I don't know about everybody on this Zoom call here, but I'm signed up for about 5 different conferences already. And so I think we're going to see more and more of that. And so to the answer to the question is, I think businesses are getting over it quicker than we think. And I think it's going to come back sooner than we think. Look, as hotel owners, you know, our leases end every day. So we got to be a pretty optimistic group just to be in this business, right? Yep. So especially if you're a hotel developer. Okay.
We're going to stick with you again, Bob. We're going to give each of our panelists just a minute or so to share with us, you know, some of their, you know, one of their successes or one of their challenges. And Bob, we'll start with you. I know Lido House has been quite a big success. Maybe, you know, share with everyone what that is and maybe why it's been such a great success.
So I've been playing with my backgrounds a little bit. I don't know, are they showing up? So Lido House, this is Lido House here. You know, that hotel opened, we're just about on our 3rd anniversary. But it's a Nantucket style hotel, really feels very residential, a place to get away. It's actually modeled after my home on Balboa Island, but it was an instant success when we came out of the gate. Obviously we got hit like everybody else, but it came back right away. And so we really learned, we had to pivot to figure out what it was our customers were accustomed to. But then you go to San Carlos up in Northern California, Silicon Valley, totally different mindset, marketplace. The people up there were very COVID averse, whereas people coming to Lido House were looking to get away from COVID, sort of as a way to just get out of the house. And so, and then Maui, I mean, we were at first shutting up. Most of the resorts, I think, in fact, all of the hotel resorts on the waterfront closed. We are not on the waterfront, and so we stayed open. I think our occupancy dropped to, a hotel that was running plus 90% dropped to 20%, 25%. Right now, the hotels is sold out for the next few weeks, but it's sort of a, it depends on where you are. We're optimistic. If we weren't optimistic, we wouldn't be in the development business. So we've got deals planned. I'll talk about Dana Point when that's appropriate. But anyway, it's a fun business. It's a different business. When you develop hotels, you are in the operations, and it's a day-to-day business that you got to be prepared for. So,
thanks, Bob. Michael, I know. Why don't you share a little bit in terms of? I know you're involved with the sale of the Marriott in Newport. Maybe just a minute or so in terms of how that was in the middle of COVID, basically.
Sure. Yeah, obviously it was. We started having conversations with Host, who dating back to June of last year. The asset ended up selling in November, but when we approached Host about acquiring this as an off-market deal, we sold it to Eagle 4 Partners and Lion Living, and Eagle 4 owns the adjoining country club, Newport Beach Country Club. They also own Balboa Bay Club and Paseo. So they had many reasons to buy this asset. It's 10 acres, fee simple, Fashion Island, unbelievable real estate. And really only the pandemic created the opportunity for them to buy it. Had we approached Host today, given where their stock price is, they would not be a seller of this asset. So really it was a perfect timing to approach them. Financing came in. We financed it, went up to 68% financing inside of 6%. So to be able to get that kind of financing at the time was really strong. And the business plan they have, they're going to plan on putting $50+ million renovating the asset, and there's a redevelopment potential as well. So it's an exciting project, not only for me to be a part of, but also for the community to elevate the Marriott, which hasn't been touched in a very long time from a renovation standpoint.
Good, thanks. And it's right in our back door there. I mean, it's our backyard there, so it's interesting. Chris, I know that you had some challenges and some obviously some related success as well. You're Swanky with the Wayfair Hotel in LA that I think you opened it up like on Valentine's Day, right before, a month before COVID really hit. So why don't you walk us through that and challenges you had? I know you had some great successes as well.
Yeah. Luckily, we got to really focus on our big challenging asset through COVID, which was no doubt the Wayfair in downtown Los Angeles. This was a deal that had been pretty much down for 2 years as we did a full, complete renovation. We activated the rooftop there. There's a basement speakeasy bar. There's lots of publicity coming out as one of the most anticipated openings in the Los Angeles market, and we had a lot of success coming and ramp on the books. A great first opening month, and then of course COVID happened. So very challenging when and anyone who's done development knows that you're always running in hot coming out of cost overruns, and you're just ready to get this thing open and start making money. And to have that happen to where essentially this was one of the few that we actually did shut down. Most of our properties we did remain open. We did shut this down for about a month and a half, and then proceeded to reopen it. But just the dynamic there in downtown Los Angeles, usually this is a great location, just a few blocks from Staples Center and walking distance from all the demand generators there. They all of a sudden go out the door when you hit COVID, and the situation there has not been all that great in the local market there in downtown Los Angeles. Luckily for us, again, as I said earlier, we do have a really sizzling rooftop bar there. We do have a plan to get our speakeasy back open here now that we are heading into the orange zone there, even in Los Angeles. So we have some new concepts that we're going to be launching there in that speakeasy. But yeah, it was a challenge, no doubt. Luckily, we had a great lender that helped us along the way, as long as some partners here, and you know, the outlook looks great as we're coming out of it, and we're excited to get that roaring again.
All right, Brian, I know we've talked a lot about this. I mean, for you and the bank, I mean, through all of this, I think patience has been sort of the key. That you've told me you've been very patient, you know, trying to help your borrowers get through all this. Maybe share that with us a little bit.
Yeah, sure. Thanks, Bruce. Yeah, rather than, you know, an individual win for us, I think, you know, our team, the biggest win we had this year was that flexibility in working with our clients to try to get them through to the other side. It was an interesting year. You know, business as usual for us became 90% of our teammates working from home. It meant becoming PPP experts. It meant becoming portfolio management experts. You know, going through loan docs that didn't contemplate, you know, a hotel going from 85% occupancy to 8% occupancy overnight. You know, so it's been, you know, throughout the year, our team worked on, you know, granting covenant relief, granted deferral of payments in certain situations, approving modification of tenant leases in our retail. You know, I think you asked about PPP earlier. I mean, the bank did over 130,000 PPP loans for $8 billion, and that number is still counting. So, and all of those were done while we were working at home, doing Zoom calls, doing WebEx. So, you know, that has been a whole different environment for us this year, and to that extent, the work's not done. We still have, you know, whether it's in the hospitality sector, the retail sector, assets that, you know, are going to continue to need help to get through this next year. So, you know, there's more work. We're very proud of what we were able to accomplish in 2020 and in 2021, and we'll continue to be there for our clients going forward.
All right, thanks, Brian. So we're gonna, I think, conclude our program here in a couple minutes. We're gonna finish off with letting Bob give us a little intel on the Dana Point project. We've all been waiting to hear about this and what's going on with it. So Bob, why don't you take 4 or 5 minutes and get us all excited.
So can you see the image behind me?
Yep.
Okay. So we are in a partnership with Burnham Ward, Scott Burnham and Brian Ward, with their retail developers. They're curators of sort of new food style. You know, they did LBX, for instance. They're doing some really creative food and beverage restaurant sites. So they're doing 130. So we're in a partnership with 2 other companies. So it's Burnham Ward and Bellingham Marine, Joe Uberoth and his team. So Joe's company is the largest dock builder in the world. We have 24. So I'll tell you a little bit about the real estate. So there's three groups, and we own the property together, and we're developing it in conjunction. So all of our interests lie together. That's how we won the proposal. We took over the management and we're running it. We own it under a long-term ground lease. It began in, we took over October 30th, 2018. So we're about 2.5 years into it. We are, our retail portion is going through plan check now. We hope to break ground by this September. Just a matter of getting plan check and getting through that. We hope to also have our first docks in the water. Joe should have first docks in the water. We're hopeful. But again, it's working drawings and getting permits done. The hotels are, so you can see here, so we have 24, like I said, 2,400 boat slips, 130,000 square feet of new retail, some existing that we'll redo, mostly food-based, but some really exciting retail that Scott and Brian are bringing to the site. And then we have 2 hotels. We're replacing the old Marina Inn, and most people I talk to don't even know what the Marina Inn is. But but it's a 136-room hotel that was built back 50 years ago. And it was originally built for the workers that built the harbor. But we'll replace that with 2 hotels. One will be Dana House. So I've got an image of Dana House here, sort of the same genre architecture as Lido House, but a little more updated. On the waterfront, 130 rooms. All rooms will have water views. It's a beautiful property. And then okay, so you've seen the retail. It is we're about 6 years total build out to get through for finishing all the docks, but the land side should be done within the next 3 years. We'll hopefully start construction on the hotels this time next year. We'll be in Coastal Commission this summer, and then go back through city planning, working drawings, and begin construction. So it's pretty exciting when you look at what we're recreating there, which was already there, honestly, but we're recreating. It's truly a renaissance for the whole region, not just Dana Point, but the whole area. The demographics are phenomenal. I mean, I'm sure some of the people that are on this Zoom meeting know of this, probably know more than most, and have been tracking it. But the docks will have the latest technology. We'll have Wi-Fi in the harbor. We'll have sewage pump out for those boaters that appreciate that. We'll have sewage pump out at each of our slips. We'll have an unbelievable visitor boaters program where you can bring in your boat, yacht. Joe's working on where you'll be able to bring in a 250-foot yacht into Dana Point Harbor, and hopefully, and likely without a permit. So, and then we'll shuttle you over into the retail area. We'll have boater access, small boater access right up to the waterfront restaurants and shops. It's very interactive. We have about I think it's about 4 miles, I measured myself, of waterfront. And we're just focused right now on the first quadrant of it, but this is a long-term, exciting development and really services for South Orange County, and something that has been long overdue. The community has been waiting 20 years for this to happen, and so I think we've really got a great team. And I can tell you our partners are very focused on delivering nothing but the best. When you look at what Scott and Brian have created on this retail, this whole boardwalk sense and feel, second story, wooden structures with a sense of walking along a pier, and it's phenomenal. It's expensive, but we're investing in this for the long run, and we're just excited to have been chosen for this. I think the community is too, and we've done a lot of outreach with our community in each part of the development. So we're gonna have a little construction going on for a little while. Be patient. Once it starts, we will get through this, get everything open. I've been asked about, so I'll tell you a little bit more about the other hotels. So we are developing 2 hotels. The second hotel is a 136-room hotel. We have to replace, for California Coastal Commission, they want to have us replace what they consider to be affordable lodging, which we are. But then we need to create more beds for the new rooms that we're bringing in. This is California Coastal Commission mandate. And so what we're doing is on our ground floor for Surf Lodge is it's a sort of more of a dormitory, dorm rooms. We have all male, all female, and co-ed. We'll have a kitchen down, a kitchen that everyone has access to cook their own food. We'll have pool tables outside. We'll have barbecue. I mean, literally, like you live there, especially for people who are traveling, backpackers and people traveling through. We'll also have a rooftop lounge on this. If I were to give it a sort of what's it like, what can you describe it like? If you've been to Bungalow at in Huntington Beach, right next to Paseo, sort of clapboard. I think they call it you're at your mom and dad's house. Mom and dad are gone and all your friends are over. I've actually told my friends, I've shared that story many times. You will stay in our hotel, and your kids, adult kids, will stay in the other hotel. But actually, you may want to stay at Surf Lodge your first night just to get into the vibe of what's going on. A little bit more about the Dana Point, or the Dana House, is we'll have a rooftop lounge and restaurant together on the 3rd floor. Unlike Lido House, where it's separated, this will be together. Great, unbelievable views of the harbor, sunsets, and beyond. And so it's really exciting what's happening. We cannot wait to start delivering to our community there of what's long overdue.
Thanks, Bob. Sorry, everyone. Somehow I lost my connection, but I'm back. It looks like we had some questions, but people must have asked them while I was off. So it looks like we had all the questions answered. So I think unless there's any other questions that people want to type in real quick, we can probably have another minute. And I think, Ed, we're going to turn it back over to you.
Hey, Bruce, there was one that Patrick asked on repurposing underutilized hotel rooms into smaller apartments or for sale condos.
Sure, go ahead.
So what we're seeing on the sales side, we're seeing a number of these older all-suite products that are going out of the system in terms of brands, and they could either be downgraded, downflagged, or we've seen a number of student housing and affordable housing aggressively chase these. So the Gen 1 Residence Inn in Mission Valley sold at $300,000 a key earlier this year. So we are seeing some, repurposing of hotel rooms.
All right. Hope we have any other questions. If not, maybe Ed, I'll hand it back over to you.
There is one more question for Bob in the Q&A.
I just can't. Yeah, it just popped up.
I don't see it. I'm sorry.
Yeah, I've got it. So Bob, I'll say it for you. So let's see. What happens to all the current retail while you're renovating?
So we have a plan to where the new retail, the first phase of it actually goes over the parking lot. The original layout of the property was that the boater parking was at the waterfront. So that will actually be moved to parking structure in the back. And so the idea is that we're trying to displace as few tenants as possible as we rebuild. So it's a challenge, but we want to be open. We want guests still to come to the harbor while we're under construction. We think that's important, and so that's our plan.
Bob, one more question for you. I think we have another minute, which is actually an interesting one. So what amenities will be added for the future that were not in your hotels in the past? So what have you learned differently?
So rooftop lounges, I think, are a big part of what we do now. Focus on culinary experience. Hotels really get a bad rap for food and beverage, and I think we've turned that corner in all of our hotels, starting with what we created at Paseo. It's very chef-driven, design-driven restaurant, does very good. Lido House, chef-driven. And I don't mean to say chef-driven where it goes too far to the other side, where, seafoam on a piece of fish, but good, solid food, dependable. And I think the focus, again, food and beverage. And then what's in our guest room? Guest amenities, the things, simple things. How do I plug my charger in? Where am I going to plug my phone in? For overnight. I mean, the little details that all add up and matter. I think we are also pushing more for an unbranded sense and feel. We actually did that with branded hotels. If you look at our Residence Inn in Maui, you don't know you're in a Residence Inn. You feel like you're in Maui. And that's really the focus of giving a sense of place, of where you are. People, and including business travelers, I'll say even especially business travelers, want to have a sense of place, of where they are, and not just another cookie cutter chain restaurant. Same thing, not unexciting. Trying to create an environment. I go on and on and on, but always another is creating Instagram moments, because our customers do our advertising, most of it, for us.
All right, thanks, Bob. All right, I think we're going to go to our next slide to conclude this. I'll wait for that to come up, unless we have any other questions. I don't think so. All right, so I want to thank everyone for participating today on the Zoom program. Notwithstanding, we're all getting a little bit with all these Zoom things, but right now it's the only way we can do it, and it's been pretty successful. I want to thank all of our speakers, of course. Great information, great stuff. And also all of our sponsors. Look, on behalf of the UCI Center for Real Estate and our entire planning committee, I think you see everyone there on the planning committee. They all spent a lot of time trying to put this together, and we're looking forward to new ones. I mean, I share Bob's sentiment earlier, saying, look, these are great, and it's worked really well having these Zoom programs. It really has been beneficial. There's actually been some research done, and they've actually been very successful, they said. But there is nothing like doing it in person. Being at one of Chris's hotels or Bob's hotels, getting together, having a drink, there's just nothing like that. And I can't wait for that to happen. And I think it will be happening somewhat in the near future. So certainly looking forward to that. This will conclude our last breakfast meeting for this series. The center's next meeting is the Housing Markets and Policy Symposium, which I think is May 12th. Just want to thank everyone for your support. Stay healthy, stay safe, and look forward to doing this again when we can do it in person.